In the high-stakes world of cryptocurrency, where fortunes are made and lost in the blink of an eye, trust is the most valuable asset. But what happens when that trust is shattered? When an exchange, the very platform designed to facilitate the free flow of digital wealth, suddenly slams the door shut on its users. This is a story of frozen funds, a public outcry, and a crypto giant scrambling to contain a crisis that threatened to bring it to its knees. It started with a whisper, then grew into a roar. Across social media platforms and crypto forums, a disturbing pattern began to emerge. Users of the popular cryptocurrency exchange MEXC were reporting that their accounts were being frozen, their assets locked, and their withdrawal requests denied without clear explanation. These weren't just small accounts with negligible balances. We're talking about significant sums, life-altering money, trapped in a digital vault with no key in sight. The simmering discontent was about to boil over, ignited by one high-profile case that would blow the lid off the entire affair. Enter the White Whale, a well-known crypto trader with a substantial following and, more importantly, a substantial amount of money on the MEXC platform. In August, the White Whale found themselves in a trader's worst nightmare. Over $3.1 million in assets, the fruits of their trading prowess, were suddenly and inexplicably frozen. The reason given was frustratingly vague, a risk control measure. For weeks, then months, the trader was locked in a desperate battle, pleading with MEXC's customer support, trying to navigate a bureaucratic labyrinth that seemed designed to exhaust and demoralize. The White Whale's plight became a rallying cry for countless others who had suffered in silence. Their story, broadcasted across X, formerly Twitter, and other platforms, was the spark. It was a clear, undeniable signal that something was deeply wrong within the walls of MEXC. The community reaction was swift and brutal. The hashtag #MeXC scam began trending. Influential figures in the crypto space amplified the story, demanding answers and accountability. Users, spooked by the prospect of their own funds being arbitrarily frozen, initiated a digital bank run. On-chain data painted a terrifying picture for the exchange, a massive, unprecedented wave of withdrawals. In a single week, MEXC saw a net outflow of hundreds of millions of dollars. The exodus was so severe that analysts began to question the very solvency of the exchange. Was this just a heavy-handed security protocol? Or was it a sign of deeper financial instability? The crypto world held its breath, watching to see if MEXC would bend or break under the immense pressure. On October 31st, the dam finally broke. Faced with a full-blown reputational crisis and a liquidity hemorrhage, MEXC was forced to act. Cecilia Shui, the exchange's chief strategy officer, stepped into the spotlight. In a move that stunned many, she issued a public apology. It was a moment of rare contrition, in an industry often characterized by defiance. Shui acknowledged the mishandling of the White Whale's case and, crucially, announced that the frozen $3.1 million had been released. It was a victory for the trader and for the community that had backed them, but the damage was already done. The apology was not just words. It was a desperate attempt to staunch the bleeding and begin the long, arduous process of rebuilding trust. In her statement, Shui outlined a series of commitments aimed at preventing a repeat of the fiasco. She promised a comprehensive overhaul of their risk control policies, the very policies that had ensnared the White Whale and so many others. The goal, she stated, was to create a system that was both secure and fair, capable of distinguishing legitimate traders from malicious actors without punishing the innocent. Furthermore, MEXC pledged to reform its account review process, promising quicker resolutions and a more transparent path for users to appeal frozen accounts. They committed to bolstering their customer support teams, ensuring that users with problems would receive timely and helpful responses, not just automated replies and endless delays. These were the promises made in the crucible of crisis, a roadmap to redemption. While grappling with the public relations nightmare, MEXC's leadership worked feverishly to counter the narrative of impending collapse, vehemently denied any rumors of financial instability, pointing to their proof of reserves, poor audits as evidence of their solvency. These audits, they claimed, showed that user assets were fully backed, 1-to-1, to further demonstrate their liquidity. They highlighted a staggering statistic. In the midst of the panic, they had successfully processed over $5.5 billion in outflows. The message was clear. We are not insolvent. We are stable. We can handle the pressure. Yet for many, the words rang hollow. The core issue wasn't just about whether the money was there. It was about whether users could access it when they wanted to. The apology and release of funds did little to quell the storm completely. Even as MEXC's executives were making their promises, new reports of frozen accounts continued to surface. It became clear that the white whale case was not an isolated incident, but a symptom of a systemic problem. The reforms, however well-intentioned, would take time to implement, and in the fast-moving world of crypto, time is a luxury. The crisis had also drawn the unwelcome gaze of regulators. Authorities in various jurisdictions, already wary of the largely unregulated crypto exchange landscape, were taking note. The Securities and Futures Commission (SFC) of Hong Kong, for example, had already issued warnings about MEXC, flagging it as an unlicensed entity. These regulatory clouds added another layer of uncertainty, further spooking investors and institutional partners. The MEXC incident serves as a stark and powerful lesson for the entire cryptocurrency industry. It underscores the critical importance of transparency, not just in financial holdings, but in operational procedures. Users need to understand the rules of the game, the reasons why their accounts might be flagged, and the process for resolving issues. The opaque risk control measures employed by MEXC created a climate of fear and suspicion, ultimately doing more harm to the exchange than any external threat could. It's a reminder that in this decentralized world, power still lies with the platforms, and that power must be wielded with responsibility and accountability. This event has forever changed the calculus for crypto traders and investors. The age-old adage, "Not your keys, not your coins," has never resonated more strongly. The convenience of centralized exchanges comes with an inherent risk. The risk of losing control over your own assets. The MEXC meltdown has forced a widespread revaluation of this trade-off. It has ignited a renewed conversation about the importance of self-custody, the merits of decentralized exchanges DEXs, and the need for traders to diversify their assets across multiple platforms to mitigate risk. No single exchange, no matter how large or reputable, can be considered a perfectly safe harbor. As the dust begins to settle, MEXC finds itself at a crossroads. The exchange survived the bank run, but it emerged battered and bruised, its reputation severely tarnished. The road ahead is long and uncertain. Can it truly reform its internal processes? Can it win back the trust of a community that feels betrayed? Or will the memory of frozen funds and deafening silence permanently brand it as a platform to be avoided? The coming months will be critical. Every action, every communication, every resolved or unresolved support ticket will be scrutinized. The exchange must move beyond apologies and promises and deliver tangible, consistent, and transparent change. In the end, the story of the MEXC crisis is more than just a tale of a single exchange's failings. It's a cinematic saga of community power, dramatic illustration of the fragility of trust in the digital age, and an investigative look into the opaque inner workings of a multi-billion-dollar industry. It highlights the tension between security and freedom, between centralization and decentralization, that defines the very essence of cryptocurrency. For MEXC, the challenge is to rebuild from the ashes. For the rest of us, it is a powerful, unforgettable lesson. In the wild west of crypto, you must always be your own first line of defense. The market is unforgiving, and trust, once lost, is the hardest asset of all to get back.